On today's show, we'll be talking all about swing trading, so grab yourself a brew and we'll begin right now. Swing trading is a method of usually trading within a channel to make money by buying an asset at the bottom of the channel and then selling it back once we reach the top of that same channel. These are trades that are generally executed over many days or longer, depending on many factors, which can include the asset's general volatility, current sell and buy pressures, as well as the overall volatility of the market. Now, before we get any deeper into swing trading, I think it is prudent to talk about what swing trading is not. When you look at the time frames used in swing trading, it should be obvious that it is not day trading. There are similarities in how they function, but in the case of day trading, most of the technical analysis is scaled down into shorter time frames, which are statistically less reliable than the longer ones we use in swing trading. Day trading is a high-stress, fast-moving venture with very considerable risk and a steep learning curve. It is not a place for beginners. Statistically, according to a study done by the U.S. Securities and Exchange Commission, they found on average that 70% of day traders lose money every quarter. Another study of Brazilian futures traders found that 97% of day traders lost money over a period of 300 days. Day trading is beyond risky and not advisable for a very big portion of retail investors. Swing trading, in addition to being less risky, is also much less stressful. Working on longer time frames means you can set a trade and do the rest of your life as you wait for the asset to move from the bottom to the top of the channel. Quite literally, in some cases, it may be a swing that takes a month or more to complete. There is no need to miss sleep or spend every waking moment looking at the charts. Of course, it is still a good idea to peek in on a regular basis, especially if your swing trade target is a more volatile asset. Of course, that is usually why it is important to pick a swing target that fits into your comfort zone, or in other words, that moves at a pace that works for the amount of time or maintenance you are willing to put in. It goes without saying that shorter, quicker assets do come with higher risks. With swing trading, you are trading the swings from the low to the high end of your channel. Whether the channel is moving up, down, or even going sideways, you can still make money. However, a descending channel has a higher risk and you need to pay a little more attention to it. If you look at the example to the side, this is a descending channel with some swing trade opportunities. You will miss the first couple of swings as you wait for the channel to be established. In making a channel, you are running lines through highs and lows to match resistance and support areas. These are areas with a higher probability of reversing the direction of the price movement. This reversal between highs and lows is what causes the normal ups and downs in your channel. With our example, our first entry point was at buy 1, and the cost of the stock was $34.4920. In this example, we will assume that we bought 10 of these for a total of $34,492. Right away, though, we have some danger on the chart. It started off fine from our buy point, and if we are waiting to hit the top of the channel, you will notice that it reversed before the channel top. And instead of selling at sell 1, we could wait for sell 1.5, which would be a small loss. Of course, in an ascending or a sideways channel, you don't have the same problem because your highs are either the same or they're going up. Of course, in our example on our descending channel, this would not be ideal, selling it at 1.5. We have to build in some safety. In this case, the price reversed 0.02% below the top of the channel price. Holy banana bread, we almost made it. If the swing fully completed, we would have made $109.80. That would have been nice, but especially in a downward channel, we need to play it safer. As a rule of thumb, instead of going for 100%, aim for 85%. So if we started at $34.4920, then we would be looking to sell at 35.42.53. If we had set a limit sell at that amount, even if it hit the value while you are sleeping, you're still good. In our example with 10 shares, they would net $93.33 each. So we're making a total of $933.30 in a time frame of 6 days. Not a bad swing. From that point, we then buy in again at buy 1.5. So 10 shares for $33.50.90 for a total of $33,509. All looks good, but then the price breaks below our channel. In this case, it does recover, but sometimes it does not. And as such, we need a stop loss strategy for this very thing. Now, our overall channel is $109.80. So a reasonable stop loss would be 30% of this amount. Thus, we would have a stop limit sell set at $33.17.96. And in this case, that stop loss would have triggered and we would have lost $329.40. Losing does suck, but we are still in $603.90. So at this point, we want back in. So we set a buy limit for $33.40, which is the bottom of the channel. And then we will set up another stop limit sell at 30%. And once the trend is moving back up, we can cancel the stop loss and then enter in our top of the channel sell limit for $34.44.28. And the next day, we have made another $933.30. If we follow through, we have another swing from December 17th to December 23rd. And that would net us yet again another $933.30. In total, in this example, we had 3 gains of $933.30 and a loss for $329.40. Thus, our swing trade channel would have net us a total of $2,470.50 over a measly 22 days. This example is actually a real stock, and I will give a huge kudos to the first person to identify it in the comments. With horizontal and even more so with ascending channels, they are easier to run swing trades as you can often recover from a missed top. I think it is still a good idea to use a stop loss and also limit sells for the top of your channel. Yes, if you miss a sell at that top, it may come back again on the next swing, but you've just cut your profits in half. Playing it safe and ensuring profits will almost always make you more money in the long run. Now, the example we went through was a very pricey stock. Obviously, you can work swing trades on cheaper stocks. All the same rules apply, though you will be making less money per share. But then again, if you invest a lot, then there is still a good amount of money to be made. So how do you find these stocks? This is not a simple process, as you have to look for them. There are some websites you can use to aid you, such as money.tmx.com. And also one of my favorites is Finviz, Finviz.com. Both of these sites have a wealth of resources to help you find your target. The big thing is to look at potential targets and study the charts and look at the highs and lows. Plot some lines and see if you have a channel. Ask yourself as well, what time frame do you want to trade in? Does the channel you are looking at mirror these expectations? You may have to look at 20 or more charts before you find your target. Keep in mind as well the time frame of your charts. If you are looking for a longer 1-month swing, you do not want to be looking at that on the 4-hour charts. Likewise, if you are looking from a few days to a week, then the 4-hour charts are probably more appropriate. If you are just beginning to swing trade, you need to take it slow until you have gotten a good grasp on what you are doing. Make smaller trades using only money you can afford to lose. Also, do not swing trade with your registered accounts. You can get in some pretty serious trouble with the CRA if you rebuy a stock you sold within 30 days. So if you are going to swing trade, do it in your personal account. Yes, you will have to pay on capital gains or more likely business gains if you are doing a regular swing trade. That is still much more preferable than the type of trouble the CRA can bring your way for swing trading inside of your TFSA. With all of that being said, if you like this video, give the like button a little swing and maybe swing it into the subscribe button. And if you still have enough momentum, carry that all the way over onto that notification bell. If you're looking for more ways to support the channel, just peruse through my affiliate links. They're down below in the more info section. And feel free to swing into any that will add value to you. So until next time, I will bid you a fond adieu.